All right. We're live here, boys, I think. Yep, we're all good, we're live. All right, so how you guys going? Having a good day? Or night, depending on where you are. Hi from Turkey, how you going? Got a question at the start here. I'll answer that in a second. Let me see if I can get to it. So first question, just straight into it. Delta asks, first question, I'm an idiot and I have current cost basis of 20.3k from earlier in the week on Bitcoin. Would you get out now, hoping to buy soon at the upcoming low, or hold? So he's asking, he's basically bought Bitcoin, his average price is 20.3k. He's asking whether he should sell or hold now. I personally wouldn't sell. That's just my opinion. And that's simply due to the fact that, we're in Q4. What I'll say is this, okay? What I'll say is this. If we lose a daily candle below 18.4k, you realistically could sell, because that would lead to a breakdown to 17.6. But if you don't care too much about like the exact price range, I personally just wouldn't sell. It depends if you're 100% in. If you're 100% in, that's a bit of a sticky situation. If you've just bought a little bit, you bought 30% of your portfolio, yeah, just hold, man. That's just my opinion, though. But yeah, I assume you bought that breakout too early, which is unfortunate. That's why we changed the buying plan. Like we had a buying plan originally at a breakout of this yellow line. A 3-day breakout, actually, which did occur, by the way. But we changed it because it didn't look like a breakout. There were so many reasons for that. I did a couple videos on that in the last few days. A lot of people were like, oh, Wolf, you're flip-flopping. It's like, well, I was flip-flopping, but I was correct, wasn't I? And I think there is a bit of a negative stigma about changing your prediction or buying plan or whatever in crypto or, markets in general. It's like, guys, that's what it's about. It's about adapting. That's the whole point. You got to adapt. New data comes in. Breakout doesn't look like what you thought it would look like. Adapt. You don't stick by plans for the sake of it. That's how you lose money for sure. So what I'd say to you is that if you bought 100% of your portfolio, it'd probably be worth, if we do see that breakdown, it's probably worth selling like a little bit. But, if you only bought 30% or something, that's just a pretty regular DCA at a pretty good price. That's my opinion, though. Zach responded to him. He said, even if we get one more wave down to 15 to 16k, that 4k difference doesn't matter. Yeah, again, like I'll say, if you bought 100% of your portfolio at 20.3k, it's probably worth de-risking a little bit. But if you didn't do that, you're probably fine. My average cost right now is 8.5k, so no matter how far it crashes, I'm going to be averaging up. Yeah, you got in early then, man, didn't you? You got in like, what would have been at the earliest, but at the latest would have been 2020 or something? Good price. Good price. Are you just holding forever or what? You're not selling? I don't know how much I agree with hold forever mentality, but I don't disagree with it. It's just, it doesn't seem like a very profitable, I guess if you don't care, it's fine. Like what I generally do is I have a long-term bag, right? And I accumulate that long-term bag throughout the bear market, and then I sell it where I think the top is in the bull market. And that's my long-term investment. And then I rebuy. But, as we head into periods of time here with, central bank digital currencies and all that kind of stuff, it would kind of make sense to have an actual long-term bag that you never touch. Because that's just security, right? So I do understand it. If you're doing it for security reasons, like financial security reasons, that's completely fine. Man, I started buying Bitcoin when it cost 300. Damn, you're early, man. Yeah, I think I was probably too young to buy Bitcoin when it cost 300. So I probably couldn't even do it if I wanted to. Yeah, I was in Bitcoin 2014 when it was sub 700. Never kept any. Used it all on weed. Yeah, man. Heaps of people I know were buying Bitcoin way back in the day. But yeah, again, they just used it to buy drugs on, what is it called? Silk Road. That's basically how Bitcoin got started. They're not wrong. Hey, when they pull out FUD and they say, oh, Bitcoin's for drug dealers or whatever, I mean, it was. They're not wrong. It was just drug dealers, not drug dealers. It was just people buying drugs and tech nerds, basically. So, that whole stigma is based in reality to a certain extent, or was at least. You're a trader. What do people expect? BS. Yeah, exactly, man. Like, adapting is the game. That's literally the game. I think as soon as I see someone say, oh, you're flip-flopping, it's like, well, you don't necessarily... It's pretty clear to me that they don't understand how trading works. Because sticking by a prediction, regardless of the evidence, will just lose you money. There's no way around it. That's the only way it's going to go. You're just going to lose money. So, people treat predictions like the predictions make people money. It's like, that's not actually true. Reactions make you money. Predictions don't do anything. They don't mean anything. It's reactions that make you money. It's how you act in the market that makes you money. We'll get into the Bitcoin analysis briefly. I'm just going to do an hour live stream today because last time I did a live stream, I went for 2.5 hours and my voice was actually gone for a full 12 hours. I couldn't talk. So, yeah, it wasn't ideal. Morning, Wolf. Only dinosaurs didn't adapt to a certain situation, so you're more than right, my friend. You got to adapt if smart, otherwise be a dino. Exactly. I think a lot of the negative mentalities that form around investing and trading do come from an older generation that have just seen up only, essentially. Aside from 2008, 2009, and the .com bubble, it's basically just up only forever since since forever actually. So I think that's where that mentality comes from, where it's like, just hold, keep your predictions steady. People only ever see the markets go up. And the market, and that's not even wrong. The markets generally do only go up over time. That's natural. That's what naturally happens. One of the reasons for that is population expansion. But for trading, it's a bad idea, for sure. When did Wolf start buying Bitcoin? Got into crypto originally late 2017. And that's not because I was, jumping into the bull market with FOMO. I mean, it kind of was, actually. But it's because, that's generally speaking when I got into stocks and cryptocurrency, mainly because of my age. And I really got into it during the bear market. I really started studying it during the bear market. I didn't necessarily understand it too well at that point because I didn't really care. But yeah, during the bear market, I really got into it. I bought in 2014. I was 14 from an ATM. They looked at me like a criminal. Yeah, that's crazy, man. 14, that's crazy. Did you know what it was? Did you actually know what it was? Or did you just buy it because, why not? Or one of your friends told you to or something like that? Because I can't necessarily... I don't know, 14-year-old, that's pretty young to understand Bitcoin, I'm in a 10k long right now, bought in at 19.5k. Should I exit break even, or do you think there will be a slight jump tomorrow? If you're in a long right now, that's a different story. If you're in a long right now, look, this is what I've got right here for Bitcoin, right? I'm going to get into the Bitcoin analysis in a second. But this downtrending line, this yellow downtrending line reflects on this hourly chart. That is the downtrending yellow line, this one right here. We've just bounced off of it right now. I would say if we lose that line, you just got to get out of that long. And right now we're getting rejected at 19.6k, which of course is the 2018, 2017 all-time high. So yeah, I'm not going to say it looks particularly good because it doesn't. If we break that, that's good news. If we get rejected from that, clearly, I mean, that's a sell signal for your long 100%. Just be careful, man, because I'm not going to make an assumption, but it looks like you longed right at resistance. Your entry price is 19.5k. That's literally right at the 2018, 2017 all-time high. Before you enter positions, just make sure you're zooming back in the price history, go long term, and just see where that major resistance zones are, and you can get a pretty good interpretation of what you should be doing. I'll get into the Bitcoin analysis in a second, for those of you who are waiting for it. What altcoins will you buy in the next bull run? I don't know yet. I'll analyze altcoins at the halving, and I'll buy altcoins at the halving for long-term holds. That's generally how I do it. And there's many reasons for that. I've done a video on that in the past. If you type up, I don't know what you type, 2024 altcoins Wolf of Crypto on YouTube, and you'll find the video I did on it. I made it about a month or 2 months ago. It basically goes over the fact that historically speaking, we don't actually see altcoins outperform Bitcoin until the halving. During that whole period of time, on a generalized basis, altcoins actually, get wrecked against Bitcoin until the halving. So there's, by buying altcoins, unless you're lucky, unless you're very smart, you choose ones wisely, or you're very lucky, you're putting yourself at a natural inherent risk. So Bitcoin's actually the preferable thing to buy until the halving, historically speaking. Were you trading stock market or crypto before? I started off in stocks. as I said, I got into financial markets in 2017. Crypto dumped. I thought crypto was a lost cause because I didn't know anything about it at that point. Got into stocks for like a year. And then I was like, wait a second, crypto's not a lost cause. This is pretty interesting. And I got into crypto. That's basically what happened. Am I an idiot for aping into Shiba? The last bull run made me almost 6 figures off of small investments. I wouldn't buy Shiba just purely because of the fact that there's no fundamental basis for it. There's no there's no backing for it fundamentally. It's just purely driven by hype. And given the fact that we're entering a bear market, I'm pretty sure hype is gone. There's no hype in the market right now. So putting yourself in a coin that is driven by hype in a market in which there is basically no hype is a bad position to be in. That's what I'd say. I'd also say that coins driven by hype are easily replaceable. Guarantee you next bull market, there'll be exactly the same thing. It might not be a dog coin. It might be a rabbit coin. You know, you don't know this kind of thing. It might be like a coin about trees that everyone hypes over because there's a cool meme about trees that's going on or something like that. You know, it's very unpredictable where hype will be in 4 years. And that coin is heavily based on hype. So yeah, I know. And people say, oh, what about Shiba Swap? It's based on fundamentals. It's like, oh, come on. Shiba Swap, it's obviously based on hype. You know, let's be real here. I don't think I know anyone who's used Shiba Swap. Is that even a thing? Am I making that up? Shiba Swap? I think it's a thing. I think I remember Shiba Swap. Alright guys, let's get into Bitcoin. Lots of stuff happened last night. Get my notepad. I did write a couple notes here that I wanted to cover. Give me 1 second. Alright. Bitcoin analysis, guys. We'll get into it now. Okay, so Bitcoin, Bitcoin's broken out. Obviously, we had that breakout of the downtrending line. It was a fake breakout, though. We didn't like the look of it. There's many reasons for that. If we flip over to the hourly chart, we can see that one of the reasons was we had, a breakout of this yellow. That's the yellow downtrending line, this thick yellow line here. We broke out. We went straight into what looked like an ascending triangle formation. Unfortunately, it was also a double top formation, right, with bearish divergence. Okay, and we said at that point, as soon as we saw that happening, we're like, okay, no, this is bad. We're not buying here. We're going to change our buying plan. We changed the entire buying plan. We'll get into what it is now in a second. But we said, hey, look, that doesn't look good. I'm not going to buy here, essentially. And we come back down here. We broke down below that double top formation, that ascending triangle, if you look at it like that. We broke down. We come down. We've seen a resistance support flip on the yellow downtrending line, which is good. It's good news, of course. However, it's not particularly good news because at the same time as seeing that, we've also seen a strong downtrending RSI line, which could be used as a breakout if we do break it. However, that RSI resistance is lining up with 19.5k resistance, which of course is the resistance from the previous all-time high in the 2018 bull market. If we scroll back, let me get a good Bitcoin chart to scroll back on. Scroll back, you can see that 2018 all-time high is actually stemming from 19.5k. So right now, yes, look, we did see a resistance support flip. That's not bad. That's not bad news. We did see a bounce of that resistance support flip. However, we're going straight head butting against 19.5k, which is the 2017 resistance, which is not good news. If we went to the Binance chart, we can also see that the volume is in a downtrend as we move up in this small local rally, which is indicative of people not willing to buy into resistance. That's not good, right? That's not good news for Bitcoin. Okay, so Bitcoin doesn't look particularly good. We changed our buying plan a lot. Our buying plan now has been changed to a break above this dotted yellow line. Okay, we can see we've altered the buying plan. We have 3 separate buying plans. I know this gets complicated for people now, right? Because 3 separate buying plans is like, oh, well, that's very complicated. It's not actually complicated, okay? It's only complicated if you don't understand it. The only reason we have 3 separate scenarios is because there's 3 potential things that could happen for Bitcoin, right? And we're going to get into that right now. There's 3 things that could happen for Bitcoin, okay? One of the things is we go down, sorry for the messy writing here, but I'm just going to have to make it work. One of the things is we go down to 11k to 13k, okay? In that scenario, we'd buy 33% 11 to 13, we buy 33% at the dotted line breakout, and we buy 33% at 17 to 18. I think that's unlikely. I don't think it's likely that we go down that low. It is possible, but I don't think it's likely, okay? So that's an unlikely buying scenario. The second scenario is we go down to 18k again, or 17k, whatever it is. We buy 33% there, and then we buy 67% at the reversal. And the third scenario is we just break out now without retesting the lows, which again is unlikely. So again, this scenario here is unlikely. This scenario here is unlikely. This scenario here is probably very likely. Okay, so this middle scenario is the one that's most likely going to happen. Okay, it doesn't mean the other 2 can't happen. It means this one is most likely going to happen. The third scenario, again, is buying 50% of the dotted line breakout and then buying 50% at the 200-week SMA, which is currently at around 23K. All right, so that's the scenarios. Now, the good part about all these scenarios, and you guys know this by now, I'm going to get into unique analysis in a second, but you guys know this by now, I'm just recapping. The good part about all these scenarios is this. If this first scenario triggers, we will have an average price of Bitcoin at around 15K. Okay, that's beautiful. That's a great average price. That would be the average price we have on Bitcoin, right? If this middle scenario triggers, we would have an average price on Bitcoin probably around 19K, which again is great. That's a great average price. And even in the worst case scenario, even if the scenario that triggers gives us the highest average price, we would still have an average price on Bitcoin at around 21K. Again, beautiful. So the worst case scenario for us right now, assuming you followed the buying plan, assuming you agree with my analysis, the worst case scenario is we get a 21K average Bitcoin price, which again, absolutely superb. So regardless of what happens here, and this is why I'm pretty happy, I don't really care too much right now, because regardless of what happens here, we've got a great average buying price. It's just about how great it is. So that's good, okay? Now, so we've got the buying plan, we've scheduled that all out, we know what's happening short term. Short term, we're at resistance at 19.5K. Doesn't look particularly good, could break to the upside, but realistically, it looks more likely that we see a rejection here, and the macro is a good reason for that in a second. But you know, one of the reasons we want to talk about the macro today is because there have been some significant macro developments, okay? One of the macro developments that have happened, for example, yesterday, which was actually just about 12 hours ago, we saw unemployment data. Unemployment data came in lower, okay? What does this mean? Unemployment came in lower, okay? That's not a good thing for the markets. And the reason it's not a good thing is because when there are more people employed, it is harder to bring inflation down. Okay, it's harder to bring inflation down when there are more people employed. That's a key point. So it's not particularly good for the markets. Okay, sounds kind of contradictory, but that's what it is. That's just how it works. So what we've seen is that unemployment data came in lower. At the same time as that happened, we've seen the 75 basis point hike for November skyrocket. The probability for a 75 basis point hike has skyrocketed from around 51% 3 days ago to 81% now. So unemployment data came in. It was bad for the markets. And as a result of that, it's prompted people to be more confident in the fact that the Federal Reserve will take a more aggressive approach in dealing with inflation. So now the chances of the Federal Reserve raising interest rates by 75 basis points has skyrocketed. The chances of them raising them by 50 basis points has kind of gone down a lot. Now, this is not good for a macro reversal. If we want to see a macro reversal, we need to be seeing, you know, a 50 basis point hike here from the Federal Reserve. We need to be seeing them slowing down the magnitude of the hikes. So it's not good. Okay, it's not good. Another thing we need to look at as well is the fact that normally when and this is very bad for the stock markets, right? We'll get into Bitcoin in a second, but this is bad for the markets. Normally, and this is something I picked up on yesterday, right? I think a lot of people picked up on this yesterday, actually, because I've seen lots of videos around about it. But normally, when the markets are in a downtrend, the Federal Reserve is cutting interest rates. This orange line here, that is interest rates, okay? And these lines here, these price action lines are the stock market, okay? The S&P 500. Normally, when we're in a downtrend, the Federal Reserve is cutting interest rates, which means it's trying to lessen the blow on the markets it's having, right? Now, the problem with this situation here is this. The Federal Reserve is raising interest rates while we're in a downtrend on the S&P 500, which means the Federal Reserve right now has realized inflation is so high that we cannot simply do what is traditional here. We have to raise interest rates even though the markets are in a downtrend. We have to do it because, you know, there's no other alternative. Okay, so the Federal Reserve is raising interest rates while the stock market is in a downtrend, which will prompt a more negative reaction on the stock market. So what I will say to that is that it is very, very, very unlikely that the S&P 500 will bottom out until interest rates start going down again, which could be 5 to 6 months away, right? There's a few reasons for that. One of the reasons is because, and this is the main reason for it, we have never seen, ever seen the S&P 500 bottom out until interest rates are being decreased, okay? These pink lines on the interest rate charts, right, are reflected perfectly to these yellow lines on the S&P 500 charts. What it says is this. It says, we have never seen a bottom on the S&P until interest rates have begun decreasing, okay? Right now, interest rates are still rising, and we have every kind of reason to believe they will be rising for at least a few more months, okay? And then they won't be dropping for maybe 5 or 6 months. That's as per the market's expectations. So we can hence assume that, hey, the S&P 500 and the stock markets, for example, traditional markets, whatever, they won't be bottoming out for a long time. 5 to 6 months maybe. Okay, so there's a lot lower to go on the S&P 500 and the traditional markets. Now, what does this mean for Bitcoin? Now, a lot of people who don't necessarily understand Bitcoin would say this. They would say, okay, if the stock markets won't bottom for 5 to 6 months, Bitcoin won't either. It's like, no, that's not necessarily the case. Generally speaking, on a general basis, you are correct, but that's not necessarily the case. All we need to do to debunk that is look at what Bitcoin has done historically. Historically on Bitcoin, just recently, we saw a top out in November, as per the 4-year cycle theory, while the S&P 500 topped out in January. Okay, the S&P 500 topped out in January as per the macro, and the Bitcoin topped out in November as per the 4-year cycle theory. Now, this is evidence to suggest that the 4-year cycle theory, to a certain extent, is stronger than the macro for Bitcoin. Okay, so what does the 4-year cycle theory suggest now? The 4-year cycle theory suggests that Bitcoin will bottom in Q4, and hence, seeing as the 4-year cycle has outpowered the macro before, we can assume it's going to do it again. I would still expect a Q4 bottom on Bitcoin, even though I think the S&P 500 will be going down for at least 5 to 6 more months. Again, I'll repeat that. I still expect a Q4 bottom on Bitcoin, even though the traditional markets will be going down a lot more. That's my kind of thing on Bitcoin. That's what I've got there. That's what I've extracted from the traditional markets, and that's what I've extracted from that unemployment data that came out yesterday. I don't think it necessarily matters for Bitcoin. I think the 4-year cycle will outpower that macro. Okay? Do I think Bitcoin will be going crazy and pumping during this period of time? No, I don't. I just think it will bottom out. Okay? I think it will bottom out. I think the 4-year cycle is stronger than the macro. I genuinely do. And yeah, that's my kind of Bitcoin prediction. So yeah, that's honestly what I'm going to post as the video there. I'd like to know what you guys think about that. Pretty controversial claim. I think the 4-year cycle is stronger than the macro on Bitcoin. I genuinely do. I have no reason to believe that it's not, right? Not only based on the fact that this is a 10-year long trend that has played out almost perfectly over a period of 10 years, but also based on the fact that, we've seen it historically. November was the top for Bitcoin. By the time the S&P 500 topped out in January, Bitcoin was already down 40%. There's no saying that can't happen on the reverse. There's no saying that Bitcoin can't top out a few months earlier and then be up 40% by the time the S&P 500 bottoms. Seen it before, we can see it again. That's my thing on Bitcoin. Right? That's what I'm kind of seeing there. 4-year cycle, very strong. Very strong. Predicting a Q4 bottom. I'm going to stick by it. Do I think that bottom will be at 17.5k? With that news that came out yesterday with the unemployment rates, I'm less confident in the 17.5k bottom, but I still would say it is the most likely scenario. I still say that a double bottom is the most likely scenario. Okay, I want to show you something that actually reflects that. Let me get out a fresh chart here. And we can look at why I think that. Well, one of the reasons I think that is this. Get out this fresh chart. It's this, right? Nothing has happened in this bear market so far, and this is something I've covered before as well. Nothing has happened in this bear market so far that is unconventional. You might argue, you might say, oh, what about losing the 200-week SMA? What about losing, that macro line that I just deleted, right? What about that? Well, those things are inevitable. You have to understand. Moving averages, macro lines, all those kinds of things, they are inevitable. They do not represent unconventional bear markets because they will break eventually due to the fact that we have diminishing returns on Bitcoin. Okay? Date range trends and structures overall, those are things we need to be looking at. And if we're looking at the date range trend, obviously 4-year cycle theory, that's going out pretty perfectly. That's very conventional. That's a normal bear market. And if we're looking at the structure, that's pretty perfect as well. What did we see? We saw horizontal consolidation in 2015. We saw horizontal consolidation in 2018. And we saw horizontal consolidation here at 28.6k. Okay? And then we saw one breakdown. And then we saw a rounding bottom on all occasions. Rounding bottom, potential rounding bottom. There's nothing here that I can see that suggests that this is an unconventional bear market for Bitcoin, which again further reinforces the fact that I think the 4-year cycle is stronger than the macro. Because even in the midst of this global recession that we're seeing, right? Some people don't even think it's a recession yet, but the fact of the matter is it is a recession, or at least it will be a recession, depending on your viewpoint on it. Even in the midst of all this crazy stuff going on, Bitcoin has still remained true to its macro structure, and obviously the all-encompassing macro structure model is the 4-year cycle. Hence, I'll say it once more time before I end the video here, end the live stream. The 4-year cycle is stronger than the macro on Bitcoin. That's my personal opinion. That's what I'm going to stick with. So, not actually going to end the live stream, by the way. I don't know why I said that. But yeah, that's my Bitcoin analysis. Yeah. What do you guys think? I'll go back and read some comments here. I don't know what that donation is about, but thank you for the donation. Wow, we got a lot of comments. I don't know if I'm going to be able to get through all these. I might have to choose a few of them. Choose a few of them to read out. I don't have a massive amount to talk about today, guys. Just letting you know. In a usual bull market, when do you look to sell Bitcoin to transfer to alts? Again, if I was going to do that, it would be at the halving. And I can get into that briefly as well, because that's something we can actually talk about a bit. Let me bring up some charts here. What is it called? Total 3. We'll go total 2 index, actually. I'll get into why I'm not going to buy altcoins until the halving. I'll get into that. That's an interesting topic. Get these charts up 1 second, guys. So this is the total true cryptocurrency market cap. And what this is it's the market cap of cryptocurrency excluding Bitcoin. So this is altcoins. That's the altcoin market cap, basically what I'm looking at right now. It's at 500 billion currently. And this is cryptocurrency, and this is Bitcoin, sorry. So what we see, and this is why I'm not going to buy altcoins at the bottom, right? Very important point. I'm not buying altcoins at the bottom. This is why, okay? This is why I'm not buying altcoins at the bear market bottom. Because if you look at the historical data, when Bitcoin bottoms, until the halving, which is obviously 2016 around May or June, we saw a 361% gain on Bitcoin, right? From the bottom to the halving, 361% gain. Let's write that down. 361%. Okay, that was in 2014 to 2016. In 2018, we saw from the bottom to the halving a gain of around 220%-ish. Okay, this is just rough data, but we don't need to be too precise about it. You get the point here. So around 220% gain. Those were the Bitcoin gains from bottom to halving in both cycles. Okay, so from the bottom in 2014 or 2015, whatever, to 2016, it was 361% gain. In the last cycle, it was 220% gain, right? Now, if we look at the altcoin market cap from the bottom, which of course was in January 2015, okay, January 2015, from the bottom to the halving, which of course was in May-ish, we saw roughly 220% gain. And then in the following cycle, we saw roughly from the bottom, which again was here, to the halving, we saw a rough gain of around 120%. This is, again, just rough estimates here, but I'm going to get into why in a second. So as you can see here, right, as you can see, Bitcoin outperforms altcoins historically from the bottom to the halving. In 2014 to 2016, we saw a 361% gain for Bitcoin. At the same period of time, we only saw a 220% gain for altcoins. 2018, we saw a 220% gain for Bitcoin. At the same period of time, we only saw a 120% gain for altcoins. Bitcoin historically outperforms altcoins until the halving. Then when the halving occurs and when we kick off into the bull market, altcoins dramatically outperform Bitcoin. That's a fact. So again, one more time, Bitcoin outperforms altcoins until the halving. So by nature of logic, you shouldn't buy altcoins until the halving because you're putting yourself at an inherent risk. That's just overall, you're putting yourself at an inherent risk. Another reason on top of that is because if you buy altcoins at the bottom, you are missing out on about an 18-month period here, right? You are missing out on an 18-month period of technological advancements in the altcoin space and new rivals coming out. So if you stack up your altcoin bags at the bottom, then all of a sudden you've got massive bags of altcoins, you've got all your funds tied up in these altcoins. By the time the bull market kicks off, there's new competitors for those altcoins, there's new things that are hot in the market, there's a new sector that's come out, everything's, your altcoins are outdated. By the way, only new altcoins really perform during bull markets. Historically speaking, older altcoins don't do very well, right? You might point at a few exceptions, but generally speaking, old altcoins from previous cycles, they die out. I guarantee you this, you can go and quote me on this right now. If you look at this bull market right here, we had in 2021, right? And we zoom forward to 2024 in the next bull market, 2025, 2024. I guarantee you, all of the big names, Solana, AVAX, Atom, whatever, what's more, Chainlink, stuff like that, right? All those big names during the bull market, Shiba, Doge, etc., all those big coins, the vast majority of them, there'll be a few left, but the vast majority of them will fall off the face of the earth. Why is that? Because new competition would be in there with better marketing, with new teams, with younger teams, more adapted to the space, better technology, and they will destroy that competition, right? Newer altcoins perform better during bull markets. So if you're buying at the bottom, you are missing out on 18 months of progression. You're stacking your bags 18 months too early. Whereas if you buy at the halving, you can get an overall outlook of the market just before the bull market. And you can understand what's going on in terms of sectors, in terms of what's hot, and then you can buy. So not only are you putting yourself at a risk in terms of a bad probability for a success because Bitcoin outperforms altcoins from the bottom to the halving, but you're also missing out on so much technological advancements in the altcoin space that you're, again, doubling your risk there. That's my opinion on that. So yeah, don't buy altcoins till the halving. That's my opinion. You can do what you want, but I would not be buying altcoins for the long term until the halving. I'd be trading until the halving, and then I'd be looking to buy altcoins at the halving. Historically speaking, that's what's happened. And as I said, we've seen a conventional bull market, we've seen a conventional bear market. Why would we go on anything except for history? Why? And by the way, for people who say we didn't see a conventional bull market because we saw a double top, I inherently disagree with that. I don't think this double top was, I don't think this was valid at all. First of all, it's not actually a double top in terms of price action. We went higher. And if you don't agree with that, sure, that's fine. Technically, longer term, it was a double top. But even assuming it's a double top, why did we see it? We have to look about why did we see it. Well, we saw it because of overvaluation, okay? During the original bull market, 2020 to 2021, Tesla, MicroStrategy, massive corporations and institutions adopting Bitcoin. There was so much hype way too early in the cycle. That's why we saw a major correction in May, bigger and more violent than we've ever seen, right, during a bull market comparatively, if we put it to scale. And then we saw a final run and we topped out as per the 4-year cycle. It's because we were overvalued here. We were not meant to be this high, okay? In a bull market, you don't see a rounding top like we saw here unless you were overvalued for no reason. Okay, so I think this was a false top. I don't think this existed. You can act like that wasn't even there. We were not meant to go that high. We were not meant to go that high. We went that high because of hype, okay? And then obviously the final top at 69K was the actual top. That was the actual top. That's where we were meant to top. So I think that whole first peak in 2021 was invalid. I don't think that was driven by natural price action. I think it was all hype. And if you were there and you were present and you knew TA and you were experiencing that, you'd know that pretty well because that was not normal. But that's my opinion on that. And that's a video in itself, that's a video in itself. But yeah, lots of people disagree. Fine, you can disagree. I just, that's my opinion on it. I think we're overvalued. I don't think it was natural. Let's read some questions. I'll scroll through and try and get some good ones. So what if the June low was a false bottom and we are actually in a bubble? Then we'll go down further. But I don't think it was a false low. I mean, look, it definitely wasn't false. Like, if do you mean like a low that won't hold? But in terms of false low, it wasn't false. I mean, we bottomed out in June for good reason, And the reason we did is because inflation topped out. That's simply why. Inflation topped out, we bottomed out. That's what happened. But yeah, I do think we'll retest that and possibly go below. Obviously, because that's what the 4-year cycle suggests, and I have to stick by that. So does this mean you're not going into WanChain again because it's not a new altcoin? Yeah, I'm not touching WanChain again. WanChain's a joke. WanChain's a joke. They can't market. They don't do marketing. They're not interested in marketing. WanChain's a coin that care about tech. They care about selling tech to big companies. They don't care about the coin. You can't have that. You can't have a team that doesn't care about the coin. The coin's not going to go up in value if they don't care about it. That's very evident. WanChain was a big mistake. I made a lot of money on WanChain, but I could have made a lot more money if I put it somewhere else. Yeah. Fundamentals don't mean everything, guys. I say this over and over again. Fundamentals will not carry you to financial freedom. Okay? You need to have fundamentals because there needs to be something to market. But at the end of the day, there's a reason why Dogecoin makes so much money during a bull market. It's not because of fundamentals. So you sell Bitcoin at the halving and transfer to alts just after the halving? Not necessarily. I mean, I buy altcoins at the halving. I have a long-term Bitcoin bag that I don't really know what I'm going to do with it. What I did in the last cycle was very clear. I bought during the bear market and I sold near the top. In fact, I'll tell you exactly where I sold. Let me get my chart up. So I bought like, obviously there wasn't one specific price that I bought at, but as I said before, if you're here since the start of a live stream, I wasn't necessarily interested in crypto too much over here. I was in crypto, but I kind of wasn't really interested. It's only around here when I saw crypto start to resurge that I started actually reading about it and get interested in it again. So I was buying throughout this entire period. I bought some during the COVID drop, and then ultimately I started selling around like these highs over here. And as we saw that rounding top, I was fully out. I was fully out by the time we saw that drop in May. And I said that in one of my earliest videos, I think. Maybe in the original Telegram group, actually. I was fully out of Bitcoin here. Then I was only trading altcoins, and I only started accumulating Bitcoin again, basically just recently in the last couple of months. I bought a little bit in June. But, that's my active Bitcoin bag. Now, I do have a very long-term Bitcoin bag that I do hold forever. It's not a massive part of my portfolio. In fact, it's barely anything. But I do have that as well. But yeah, generally speaking, I mean, what I did last cycle is I just bought during the bear market. I sold on the way up. And then I shifted into altcoins. As I saw there was an altcoin season coming, I started shifting into altcoins. And I assume I'm going to do the same thing in the next cycle. I might actually stack a lot more into my long-term bag. Haven't thought about it too much, but I might do that because I'm a bit worried about the state of the world, to be honest with you. And I think it's good to have Bitcoin in long-term reserves. I can't say I was particularly worried back here. During the last bear market, I didn't really care. I don't think anything was really that pressing at that point. The world looked pretty fine. Right now, as we drift further and further into time, the threat of tyranny keeps kind of rising up a little bit, and I'm getting a little bit worried about that. So maybe long-term holding Bitcoin, like forever in cold storage, might not be a bad idea. Just in case, fiat collapses, something happens. Who knows? Guys, what do you think of Americans? Do you accept them here? Do you accept them here since most of you are Australian? Yeah, I got no problem if you're American, man. I'm not racist towards Americans. I'm pretty sure most of my audience is American, maybe 40%. 20 to 30% Australian. Yeah, man, you're all good. Nothing wrong with America. Nothing wrong with Americans, I should say. How about XRP? I'm going to be honest, I don't think it's a good investment. XRP chart looks ugly. I know XRP stance will be mad if I say something like this, lol. Yeah, we can take a look at XRP. Look, I don't really care too much about XRP in terms of fundamentals. It just doesn't interest me too much. I know that they're working with central bank digital currencies. It should be interesting to see where it goes in the future. I do need to keep an eye on it. But I mean, in terms of fundamentals of any particular altcoin, again, I'm not a big altcoin person, so I'm not particularly interested. But, I know that it's got a massive cult following. I think cult followings, to a certain extent, make me a bit uncomfortable. I don't like the idea of it, because I think when you fall in love with an altcoin, it just always ends badly. But I don't really feel like charting up altcoins today, guys. I'm going to be honest with you. But XRP, it's pretty clear what's happened here, right? I mean, just looking at it for 2 seconds, that's a rejection. Pink line's resistance, that's a rejection. We might be seeing, for example, bearish divergence already forming, bearish MACD crossing coming. It looks like it's exhausted here. It's seen a breakout of a triangle. It's exhausted. It'll probably trend back downwards towards the nearest support zone. If we're looking historically, where would that be? Let's see. We can probably see a support zone at around, just looking at the historical data, somewhere around there, right? And you can see that's probably where we'll trend down to an XRP. I think we'll see a retracement eventually. Could see a retest of the top, but ultimately I think we'll see a retracement. It's exhausted, man. It's exhausted. We've seen a move, 75% move during a bear market. It's exhausted. It's going to come back down. Read some more questions here. Yeah, I'm curious as to why you're putting more on the breakout than the bottom. My only guess is that... you're asking me, guys asking me here, why am I buying at the trend reversal? Why am I buying so much of a trend reversal, not at the bottom? And it's because the bottom's not confirmed in any scenario, right? You can buy at the bottom, it might not be the bottom, you drop down further. You buy at the trend reversal, it's most likely the trend reversal. So the bottom is a guess. The trend reversal is a certainty via TA. Not a certainty, but it's very likely. That's the reason. Again, it's because I'm conservative. I'm waiting for confirmation. Exactly. Confirmation's needed. It's trading. I apply the same principles that I use in trading to longer term investing, right? You need confirmation. Have to have confirmation. Not financial advice, but it's very likely 2025 the minimum price would be 69k. So why sell at 20k unless your thesis is Bitcoin is dead and the 4-year cycle is invalidated? I suppose because you want lower prices, but again, I do agree with you. I do agree with you. Alright guys, I might end it off there. I know it's been a pretty brief live stream. I just wanted to answer a few questions, jump in here and live. Send me Tim Tams. I'm not going to send you any Tim Tams, my friend. Not going to send you any Tim Tams. Controversial opinion. I don't like original Tim Tams. I only like the dark chocolate ones. That's a controversial opinion. I'm a fake Australian. I just think there's better biscuits, man. Okay? I just think there's better biscuits. You know, mint slices, they're great. Jeez, I'm about to get lynched. I need to get out of here before my Australian comrades come at me for that. Shh. Jeez. Do you trade Forex or anything since you use so much TA? Occasionally I trade Forex. I do trade, I wouldn't really call it trading, but I do, you know, let me see here, what's the chart? I do utilize the Australian dollar to USD chart because obviously as an Australian, I have Australian dollars and so I trade between USD and Australian dollars on exchange. So if USD looks good, you know, for example, I'll just like hold a lot of the USD. And if Australian dollar looks good in regards to USD, I'll just hold a lot of it AUD and then I'll convert between and I'll just utilize that. That's about the extent of the Forex trading that I do, but that technically is Forex. I trade Forex via cryptocurrency exchanges, which is pretty funny. And I know Whale does the same thing. I know a lot of analysts do the same thing, actually. I don't know if inflation has topped out. Gas prices are up $1 since 3 to 4 weeks ago now, and yeah, exactly. So gas prices have skyrocketed once more. And we can go to the daily chart and look at that. They've skyrocketed, okay? They've skyrocketed. They've come back up to the channel. Technically still is a bullish channel formation. We can expect it to break to the upside. Not that TA matters too much when it comes to gas prices. I mean, it doesn't really matter too much. But if we're looking at inflation numbers, the market is still expecting an 8.1% inflation. So the consensus, this is important to note, the market kind of predicts things, okay? So the market prices in what it thinks the macro is going to look like. That's why you see price movements, essentially. That's one of the reasons. So the market has said here, we're going to see an 8.1% inflation, right? Now, inflation is currently at 8.3%, so the market is still expecting a decrease in inflation. Now, I don't know if that's going to change between now and when CPI happens, which again is in 5 days. But as of right now, they're still expecting inflation to go down. This could go one of two ways. Inflation could go up, and the markets could get wrecked and will dump down to the lows on Bitcoin, and the S&P will go down massively. Or it could be correct, and we'll see gradual upwards price action. Just got to wait and see, man. So 5 days on that, that'll be interesting. If we're going to see Bitcoin retest for lows, if we're going to see Bitcoin come down to 17.6k, there's a very high likelihood that it happens within the next week. I'll tell you that right now. Because, you know, CPI is coming out. CPI is a big deal. CPI leads to the same price action. If you look at the last CPI release, what happened leading up to it, we saw a pump in the 3 days leading up to it from 18.5k all the way up to 22.7k. And then in the day after it, we dropped down immediately down to 19.5k. That's CPI volatility. CPI volatility can very well bring us down to the lows. Or it could break us upwards. We'll see. But yeah, you know, definitely 5 days from now, CPI on the 13th. Keep an eye out, man. That's going to be major. That's going to be major for sure. They are the best, man. Haha, such up with the coffee with them. Tim Tams. Yeah. You're a classic wolf. Kingston biscuits are the best. I like Kingston's. They're good. I like biscuits and gravy. Biscuits and gravy? Nah, man. Nah, I don't know. I don't know about that. I don't know about that. That's rough. You are the only one on YouTube who called the bear market. Now I believe your TA. Well done, sir. I don't know if I was the only one, but yeah, I don't know if I was the only one, my friend, but I was definitely one of the few. But I appreciate that. Thank you. You know, I'm glad you found it useful. What time do you go to sleep? Like 4 a.m. My sleeping pattern is destroyed. 100% destroyed. Crypto does that to you, man. Trading does that to you, 100%. The problem for me is that in a typical bear market for Bitcoin, Bitcoin loses 90% loss plus, and we're not there yet. So yeah, this is something I've covered quite a bit in the past. I say that a lot, don't I? I say this is something I've covered quite a bit in the past. I say that like 5 times a day. I'm going to try and mix up my vocabulary a little bit. But yeah. So he said basically Bitcoin drops 80% in every bear market before, and this is true. For example, 2013 we dropped like 80%, 86%. 2018 we dropped like 84%. Okay, and he's saying, well, why haven't we dropped that much in this bear market? So far, we've only dropped like 74%, 73%. The reason is, it's not a trend, okay? We've seen 2 data points of 80% drops. 2 data points is not a trend. 2 data points is a coincidence. So if we see 3 data points of it, for example, if we drop 80% again in this bear market, then we can say, okay, that's a trend, and we can keep doing that. But right now, it's not a trend. It's not a piece of data we can use. 2 data points is not a trend. Very important to know that. Biscuits and gravy are good. He ain't talking about sweet biscuits, by the way. Yeah, breakfast ones. I still disagree. But yeah, I mean, each to their own, man. You know, if that's what you want to do, you can do that. You can do your weird biscuit gravy combination by yourself and not involve anyone in it, because no one wants to be involved in it because it's disgusting. But hey, look, that's up to you, man. All right, guys. I might end it off there. Thanks for watching. Thanks for tuning in. Short live stream today. Only 45 minutes, but hey, look, better than nothing. And